The cruise industry has experienced a spectacular revival, heading into 2024 with record-breaking bookings. Millions of new passengers are set to embark on their maiden voyages, with approximately 36 million people expected to cruise this year, a 20% increase compared to 2019. This resurgence is driven by the unique appeal of cruising, which combines ease of booking, convenience, and competitive pricing. Yet, this recovery follows a period of unprecedented challenges during the COVID-19 pandemic, which led to quarantined ships, halted operations, and an accumulated debt of around $74 billion over 2 years. Initially, many questioned whether the cruise industry could bounce back, but it has demonstrated remarkable resilience. In early 2020, the cruise industry was blindsided by the pandemic. Viral outbreaks on board led to mass quarantines and ships being denied entry at ports, which created a chaotic scenario. Stock prices of the major cruise companies plummeted, and the industry faced a complete shutdown for 15 months. By September 2022, the 3 largest publicly traded cruise lines were saddled with a staggering $74 billion in debt, with annual interest expenses surging from $200 million to $1.8 billion. This scenario forced cruise operators to focus intensively on managing costs and maintaining their fleets during the extended period of inactivity. Despite the significant setbacks, the industry began to recover in 2022 as restrictions eased and passengers returned to the seas. That year, 20.4 million travelers embarked on cruises, spurred by the lifting of CDC guidelines and pent-up demand. This resurgence was reflected in the financial performance of leading cruise lines. Royal Caribbean's revenue, which was nearly $11 billion in 2019, is anticipated to climb to about $16 billion in 2024. Carnival, similarly, is expected to grow its revenue from nearly $21 billion to approximately $25 billion. Throughout 2023, the industry recorded unprecedented revenue and pricing levels, setting a solid foundation for continued growth into 2024. Royal Caribbean's latest marvel, the Icon of the Seas, launched its maiden voyage from Miami in January 2024. The ship had already set booking records since October 2022, reflecting the robust demand for cruising. Notably, Royal Caribbean has achieved the highest increase in ticket revenue compared to pre-pandemic levels, with profitability evaluated through EBITDA per capacity unit, indicating strong financial health. This contrasts with Norwegian Cruise Line, which only returned to profitability in 2023 for the first time since 2019. The industry's resurgence is further highlighted by the record-breaking momentum of bookings and share prices, underscoring a renewed enthusiasm for cruising. Operating costs for cruise ships are relatively fixed once a voyage begins, regardless of the number of passengers on board. This means that maximizing occupancy is crucial for profitability. Traditionally, cruise lines have strived to fill their ships by offering last-minute deals. However, the industry is now adopting pricing strategies akin to the airline industry, where prices increase as the departure date approaches. This shift is designed to maximize revenue and align with consumer expectations. Cruising remains an economical alternative to land-based vacations, typically being 25 to 30% cheaper, a difference that widened to 40 to 50% during the pandemic. Royal Caribbean's effective cash management during the pandemic has allowed its stock price to rebound more rapidly than its competitors. While all cruise lines had to issue equity and debt to navigate the crisis, Royal Caribbean minimized equity dilution, unlike Carnival, which issued 400 million additional shares in 2020. Carnival faced greater challenges due to its extensive portfolio of 9 brands operating internationally, compared to Royal Caribbean's more focused portfolio of 3 brands primarily serving North America. The complexity of catering to diverse markets and navigating international regulations added to Carnival's recovery hurdles. Nonetheless, the cruise industry has managed to restart operations from a virtual standstill, with ships transitioning from zero revenue to full operational capacity, a feat likened to the launch of a startup. This recovery was uneven across regions, with North American operations resuming faster than European counterparts, which faced additional challenges such as energy crises. Private destinations have played a significant role in the industry's comeback. Carnival's investment of $500 million in a new private beachfront in the Bahamas and Royal Caribbean's already successful Coca Cay, which opened in 2019 and serves 3 million guests annually, have enhanced the appeal of cruising. These private locales offer exclusive experiences that attract more travelers and contribute to the financial stability of cruise lines by driving additional revenue and providing unique selling points. Looking ahead, the cruise industry aims to close the pricing gap with land-based vacations and increase pre-cruise spending. Customers are now spending 20 to 30% more on onboard amenities and shore excursions than before the pandemic, facilitated by advanced booking options and data-driven pricing strategies. This focus on pre-cruise spending is part of a broader strategy to enhance the overall value proposition of cruising and ensure that passengers make the most of their time on board. Despite ongoing new ship constructions, the pace of building has slowed, reflecting a strategic shift towards managing demand rather than pursuing rapid expansion. The emphasis is on rewarding brands that face high demand rather than merely filling shipyard slots. This approach marks a departure from the pre-pandemic trend of aggressive fleet expansion, emphasizing sustainable growth and operational efficiency. However, the cruise industry faces challenges, particularly regarding environmental impact. Cruise ships are known for their significant contributions to climate change, and while the industry has pledged to achieve net zero emissions by 2050, the path to this goal remains unclear. Despite efforts to mitigate environmental damage, cruising is inherently less eco-friendly compared to other travel modes. Nevertheless, the cost-effectiveness of cruising continues to attract travelers, particularly younger demographics, with millennials and Gen Z now making up 36% of cruise passengers. The affordability and appeal of cruising are drawing in younger travelers who previously viewed it as a vacation option for older generations. Capitalizing on the current momentum will be crucial for the industry's future. Cruise lines plan to do so by narrowing the pricing gap with land-based travel and managing potential risks such as future viral outbreaks. As the industry continues to evolve, maintaining this positive trajectory will depend on balancing profitability with sustainability and consumer demand. Entering 2024, the cruise industry is poised for growth, building on the strong recovery and renewed interest seen over the past year.